Hey traders, Nick Shaheen looking at Roku, a pretty popular stock. It had renewed life. It got tested in the last couple of weeks, and the support around 104 held. Of course, the 100 held. It's a round number, and it's a psychological number, and it's actually a real number from the charts. My orange line says, careful, it's crossing 100. Do what you need to do. Depends on your position and your thesis. You buy the dip if it's your thesis, or you start looking at buying the dip and you buy it at the second level, or what. So it all depends. All right, so I'm looking at a day chart. I don't have my drawings on it. I'll show you in a little bit. Very bullish price action off the bounce, and now it's headed into the last video I did. I said as it approaches 120, because of the rumor, there was a buyout rumor or something, I would book or lock, and I wouldn't start new because just in case I'm late in the session. And I said as it approaches 128, that was a point of contention, a point of control on a shorter period of time. So in essence, it should hit the brakes. So I said literally getting to here is going to be easier than getting through here. Here being 28 plus or minus. So it failed at around 131 this week, and I put failed in quotes because I don't want it to sound derogatory. It's just a price action where you hit resistance, you fail, you build up more momentum, and I'll show you on a lower time frame how it looks as to how it happened around 120. So it's not that I was wrong at 120. It was the correct price action. So it hit the level, it retreated a little bit, gathered footing at the prior baseline, and then boom, they attack the neckline. They go through it. Same process repeats at every ledge on the way down. All right, so looking at it, it looks like one giant dip for COVID. Let's ignore this because that was a COVID thing. So say the dip is down to here, and then you have a slanted lower high, and it's almost like mechanical lower high, and now they're attacking it. So you have one trend line that's ready to break. And if it does break, it looks like an inverse head and shoulders that should rally as much as this at least. So 170 is within sight. So the all-time high is still attainable. All they need is to spark. The problem is with the whole market, is it going to continue this bullish? We are at all-time highs when the whole economy is never been worse. So we have more people unemployed than ever for a longer period of time. And what's going to happen with the economy? So you hear the experts say, is it going to be a V-bottom? Blah, blah, blah. It's been a V-bottom for stocks, but it's not a V-bottom for the economy. I doubt it's going to be a V-bottom for the economy. It's going to be one cliff. It's going to take months and months to get up. The Fed is trying to create liquidity, so it puts the monetary system in place in order to support growth, meaning they make sure the banks have money, blah, 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 to grow the economy. So it doesn't become a hindrance. They cannot lend. They just make sure that people that lend have money. So like circulation of money. By doing that, they buy stuff. Like they buy bonds, and now they're venturing into ETFs. God help us. So when they buy stuff, money from their pockets is going into the system. So there's more money flowing in the system. That's the easy way to look at it. And then we have sentiment. Sentiment is super good right now. Don't know why. We had one freaking jobs report that was a wild card, and now people believe it over all these bad reports all over the place. So sentiment is riding high, but that's a ginger thing and it can flip on a dime. And then you have the makeup of the charts, and the chart makeup is bullish. So you have all three ingredients for a rally, but the main ingredient, sentiment, can flip on a dime. So know where you're at when you get started long into something at all-time highs. And this is not all-time highs, but the whole market is. Back to this opportunity, there are definite lines that would be happy. So now we have lower high trend, we have higher low trend, and this is a daily. So you need more granular lines in order to chase. So let's go down to 60 minutes, so 1 hour charts. All right, so now I can see a clear neckline here, and I'm going to speak to it and then see if I can remember my lines. And I said towards 120, I would get out. Okay, so 120 wasn't the actual place to get out. It was 123. But then the reason why I would want to say get out, because it has to dip to reload, right? That's what I just said. You hit a wall, you dip, and you reload. Usually the wall is a pivot line from before. We had these, and they exceeded them a little bit, but then they went back where to? For the baseline from which they sprang, right here. at 114, 115, that was the baseline from which they sprang. They came back, okay, footing, that's pretty good, let's go. Now they hit another wall, they're going to do the same thing. They fall back, they're not at the baseline yet. They're retreating. So I would rather buy it on a dip to 120 because that was the first stall. And again, it's a zone, not a hard line in the sand, than buy it up here. This is where I thought it would have a lot of, see that orange line? That's the actual volume point of control. This is actually where they bought it and sold it the most. Who's they? Whoever loves the stock and hates it. They buy, sell, buy, sell. So it's sticky. You can't go butter. You have to hit it, fight over it, and then do what you want. Fade or go through. So if it goes through, that trend line breaks. So there are people that like to chase trend line breaks. Some people like to chase level breaks. I like to chase level breaks. I forego the trend line breaks. So let me see. I'll mark it up. This is a trend line. Yes. And some people like to chase it as soon as it breaks. Oh, we're going to the moon. They chase it. Whoops. I prefer not chasing it here. I prefer chasing the level break. I'll forego this so I don't get faked out. What if it breaks here and then fade? Because the idea is it does this, it fades, it hits the floor, goes back, and then breach through it. That's why they jump the gun. I'm not saying my thing is better than theirs. My personal style is that. I trust a level break versus a trend line break. So pick your poison and decide how to chase it technically. So if you love the stock, you should have bought it already. Close to 100. What were you waiting for? If you're trading the stock, then you need a system and you need a trigger. Pick a trigger. Line break, level break, whatever it is. If you need to, go down to the 5-minute increments. Okay, so I wouldn't chase it until it breaks through here at 129.60 or 132. Depends on my speed. If I'm slow, I go back. I probably won't chase it until it breaks through this guy. So it all depends on my time frame. So if I missed buying it at 115, next time it comes close to 115, I should just buy it. I don't get scared. This is a momentum stock. It moves fast in both directions. And when it's rallying, it looks like it's going to break down. When it's falling, it looks like it's going to zero. So you have to pick your levels to make those difficult decisions. Going to zero, not really. Look left, see where you like it, and take a stab at it. Right now, it's in the hands of the bulls, and you know the dip is going to be bought, and I bet you that if it approaches 120 in this market construct, it will be bought. So if I missed the rally, I'll probably get in at 120. My earlier video was I'd get out at 120. See, I'm agnostic. I don't give a shit. All I want is price levels that make sense. They struggle with this, poke, and then they broke through. They come back to it. They're going to test it as support and use it as support unless something unusually happens. Now, keep in mind, there's that headline dangling. Was it? Wasn't it? Don't know. So that's up to you. I'm personally not in this stock. If you force me to do anything with this stock, I would sell puts in it to own it much, much lower, or put spreads way out in time and just forget about it. Let them fight it out in the trenches. I'll be outside with binoculars in headquarters just looking at it. All right, this was an update on Roku. Fundamentally, I didn't mention it because you probably already know my feeling about it. They don't make money. They've had 17 years practice, and they still don't make money. Maybe they're working on their plan. Maybe this environment is better for them. So I'm not in love with it, but it's tradable. It sure is popular. So pick your spots and try not to fall in love with it, because then you're probably going to make a mistake. So on the daily, I can visually see two areas of contention. Oh, we didn't show my lines. So we'll show my lines before we leave to see if I spoke true to my lines. So here's a cluster right there. Right? They fought lower highs, floor, you know, with this, whatever that is, earnings. And then, woo, right? They came back to it. For all intents and purposes, they failed. They're coming back to it. I'm not saying they will fail again. I'm saying onus is on the bulls to show this time is different. And then it looks like, okay, they attacked the neckline. They can do this if they wanted. I don't mind. But you have to respect the prior, whatever happened here before. And this has been, you know, one level after another. That's why this was a buy zone, because of this. And this was a buy zone. So if you knew the stock, you should have bought it here. Shame on you. No, I'm just kidding. But seriously, this was a buying opportunity for somebody that knows the stock and wants to get into it. All right, let's put the lines in. Ta-da! Let's reset. All right. So the last set of lines, I know there's a whole bunch before. Almost all of them came true. I'm not predicting the direction. I'm predicting the path once one direction it happens. So I bet you from the last video or one of the last videos I said the range is tight, or if you remember, then you must have gotten this right up, because I draw these ahead of time and I say there it's tight, the range, it's going to break out or down. If it breaks down, I put one leg down, meaning they're going to buy the dip, because if this was COVID, it's not going to be as bad as COVID. I said if it breaks up, it's going to get to about here. So it failed almost exactly where I said it would fail, not because I'm a genius, because that's what happened before. So the move happened. From here, it's a completely new decision. And the decision comes, like I just discussed, what happened last time? Show me the money. So can the bulls break through this past failure? And if they can, then the chart is conducive for a big rally with big resistance around this level and this level. So if I were to pick levels of resistance, 139 and 152-ish, 151. Nick signing out.